Hi guys, so today will be a combined recap of Monday and Tuesday's trade, and I just thought it would be a really good lesson to go over, and I just thought I had to record this video to at least like mark this lesson down, because if you see on the screen it was two like good trades, like exactly according to the plan, everything, but I somehow still messed it up and I got a break even on this trade and I got a 1-to-1 on this trade. I manually exited a little bit. So I'll talk a little bit about like the lessons and all that afterwards, but we'll go through the analysis for Monday and Tuesday first. This is that Monday candle right there. So starting on the daily, previous day was Friday. So Friday closed below Thursday lows. So basically we want to target Friday lows, but you can see that on Monday we already basically went below Monday low. My bias was kind of loose, but then I was also betting on the fact that we'll probably form this daily fair value gap right here. I know it's a bit hard, but daily fair value gap right here. So I don't want to be too bullish because I don't want it to cover this gap. This is that Monday trade right there. We can see that we have this SMT right here. So it's a higher time frame SMT. We can look for like a retracement trade, maybe not a reversal yet. I wouldn't be confirmed for a reversal, but something like a retracement trade would be okay. Yeah, on the 4 hour, that's pretty much it. And there's also this fair value gap right here, which is kind of like my main thing that I wanted it to draw into. And going down to the 1 hour, we also have this equilibrium right here of this range. So equilibrium, 4 hour fair value gap. There's a lot of things that price can potentially retrace into. So going down to the 1 hour, I saw that we have this bearish fair value gap right here, but I wasn't bearish again because of that SMT and because we're still in discount. We also have the 4 hour fair value gap that we weren't into yet, so I wasn't too bearish. I was more looking for a bullish retracement trade, but the main reason why I wanted to look for a bullish retracement was because on the 1 hour, even though we have this fair value gap, right? Actually, let me just keep that on. Even though we have this bearish fair value gap, we also just created a bullish one here. As you guys can see here that I marked out. And not only did we create a bullish fair value gap, we have these two downward candles being closed above. So we have a change in the state of delivery with a fair value gap overlapping. So therefore, I'm more looking for this to get ran through, and I'm more looking for a retracement into a H4 fair value gap or something. I'm not really expecting this to hold anymore because of that change in the state on the 1 hour. So basically that was my main frame for this trade, was that H1 fair value gap and the H1 change in the state, which makes this basically an order block, and we actually went down to retest that order block as well. So going down to the 5 minute, my entry was just a 5 minute inverse fair value gap and a 5 minute change in the state. So we can see here we have 5 minute change in the state right here, and then 5 minute fair value gap right here, and it was also a mini AMD, you can see. So this is the inverse. As soon as we closed above that inverse, we also closed above that the downward candles, so it was a change in the state. Yeah, there was no 5 minute fair value gap, but I wasn't too concerned because we have that. And there was also a mini AMD right here, accumulation, manipulation, distribution. So that was that. And the actual trade was actually something like this. I actually targeted this 5 minute candle, 5 minute body, because one of my previous mentors told me that sometimes price doesn't like to go to the wick, it just goes to the body. So my target was actually like this. After price was like around there, I put my stop loss to break even, and actually I got a break even on this trade. And the main thing was just because of that. So I'll say this is pretty much just like an unlucky trade. It wasn't badly managed or anything. Yeah, I'm actually okay with this trade. It was just unfortunate that it didn't went into that. If I had did a 1-to-2 exactly, it would have hit like right there if it was a strict 1-to-2. But that is also not really like a technical thing, I guess. Like I wouldn't say that's a technical mistake. Like if I didn't have a strict 1-to-2 plan, I would just aim for like an actual point, right? So yeah, I don't think that's a big mistake or anything. This trade was actually okay. If anything, I think it could be reasonable to take it off here when it closed below this low. But either way, I think it's fine because I'm not like monitoring this trade the whole way through. It was already like past London session, so it's kind of like a set and forget that kind of thing. Okay, now going back to the daily, we'll look at the Tuesday trade. So on Monday, we formed that fair value gap, right? This is Monday, and Monday's candle took out Friday's candle, but it didn't close above. But it closed above the previous day low, right? So since this candle closed above this candle, it didn't close below it. I was expecting this high to be our drawn liquidity, okay? Just by looking on a daily. That was my bias going into Tuesday from the daily bias. And going down to the 4 hour, I don't think there was much to look at as well on the 4 hour. Just that 4 hour fair value gap still hasn't been tapped in. And we also have SMT with previous day lows with GU. So that was it for the 4 hour. And on the 1 hour, as you guys can see, it's actually the exact same setup. So we have a 1 hour change in the state right here with this candle, right? Close above these two downwards candles. And we also have 1 hour fair value gap. So order block, change in the state, fair value gap, SMT with previous day lows, and a drawn liquidity right here, which is the previous day high. And the reason why this worked out so well was because there was a higher time frame narrative, and because look at this inducement range, right? It was just literally like stacked highs. So that was why I would say this trade was better than that trade, even though the entry confluences was pretty much exactly the same. SMT 1 hour, and 5 minute. Or the entry as well was the 5 minute inverse fair value gap and change in the state. So we have a 5 minute inverse here, and then we also have a change in the state right here. So I entered somewhere there. And that was my trade for this one. And I actually got out here at this, literally at the bottom. But the reason why I got out was because of this 5 minute change in the state right here. And the main thing was like the psychology. I was just a bit shaken by yesterday's thing, how it basically was like 1 pip away from my stop loss. From my take profit. So I thought like I didn't want the same thing to happen as yesterday. So I just took it off there for a 1-to-1 pretty much. Yeah. No, not there. I took it off there for a 1-to-1, a literal, like exactly 1-to-1. Which is kind of unfortunate because this is a really good trade. And so the lesson here is that I shouldn't have taken this trade off because of yesterday's trade outcome. Like you can't, even though the entry and everything was exactly the same, the confluences was exactly the same, I can't just base today's, actions based on yesterday's outcome because today is a different market, even though the confluences was exactly the same. Overall as well, something that I had to consider was just that there was a very clear draw on liquidity on Tuesday, and that the inducement range was just too obvious. Everything was too set up too nicely for me to just manually take profit on that one. So this was honestly really bad. This was just an emotional decision based on yesterday's outcome. So yeah, it's just a lesson to be learned there, to not base your trades on previous days, even if all of the confluences and everything was exactly the same. So next time I'm in that kind of situation, it's better to just leave my take profit or to just make decisions based on the charts, not based on because yesterday did this or yesterday did that. Like that is not enough data for me to change my entire strategy. I still should be trading off my strategy and should be trading off like what the market is showing me. To be completely honest, even though it was kind of a change in the state here, market structure was still bullish because it was still going up like this. Whereas the previous day, market structure already went bearish from this after it broke below this point. So it is two different scenarios here. So yeah, this was just unfortunate because I was reflecting on yesterday's one. And so that's why it's important to, at the end of every day, kind of debrief yourself and after like documenting all that trades and everything, just kind of like get that trade off your mind so that you don't have any leftover fears or leftover like resentment, I guess, towards something like this. But overall, from these two trades, just up 1%, when I really could have been up 4%, 2 from here and 2 from here. If you guys like this video, remember to like and subscribe, and I'll see you guys in the next one. Bye.